Simple Index Fund Portfolio. Examples for beginners. Hello everyone and welcome back to the channel. This is the final video in our Index Fund series. Over the past 7 videos, we have covered a lot of important topics, from understanding what index funds and ETFs are, to comparing them, choosing the best funds, learning how to buy them, deciding how much to invest, and avoiding common mistakes. Today, in this final video, we are going to bring everything together. I will show you simple and practical portfolio examples that beginners can actually use in real life. We will go through 3 easy portfolio options, explain the pros and cons of each, and walk you through how to build and maintain them. The goal is to help you move from theory to action with a clear and simple plan that you can start using right away. As always, this video is for educational purposes only and is not financial advice. Please consider your own financial situation before making any investment decisions. Let's begin. Why keep it simple? One of the biggest mistakes many beginners make is trying to build a very complicated portfolio with too many different funds. They think that more funds will bring better diversification or higher returns. In reality, having too many funds often leads to confusion, overthinking, and eventually giving up on investing altogether. For most beginners, a simple portfolio with just 1 to 3 funds is more than enough. Simplicity is actually a strength, not a weakness. When your portfolio is simple, it is much easier to understand, easier to manage, and much more likely that you will stick with it for many years. And in investing, staying consistent over the long term is often more important than having a perfectly optimized portfolio. That's why in this video we will focus on 3 simple and effective portfolio options that are suitable for most beginners. Option 1. One fund portfolio. Maximum simplicity. This is the simplest possible portfolio. You only need to buy and manage one single fund. Recommended fund, VT, Vanguard. Total World Stock ETF. Expense ratio, 0.07%. Holds thousands of stocks from the United States and more than 40 other countries. Gives you instant global diversification in just one fund. Example portfolio, 100% VT. Who should use this? This portfolio is ideal for complete beginners who want maximum simplicity. It is also suitable for people who don't want to spend time managing multiple funds or making allocation decisions. If you prefer a true set-it-and-forget-it approach, this option is worth considering. Advantages: extremely simple to manage, automatic global diversification, low maintenance, and reduces decision fatigue. Disadvantages: you have less control over how much of your portfolio is invested in U.S. stocks versus international stocks. You cannot easily adjust this ratio if your preference changes in the future. How to build this portfolio? Open a brokerage account. Search for the ticker VT. Invest a fixed amount regularly, for example, every month or every time you receive your salary. Set up automatic dividend reinvestment. This is one of the easiest ways to start investing with global exposure. Option 2. Two-fund portfolio. Recommended for most beginners. This is one of the most popular and balanced options for beginners. It uses 2 funds and gives you more control compared to the one-fund portfolio, while still remaining very simple to manage. Recommended funds: VTI, Vanguard. Total, U.S. Stock Market ETF, or VOO as an alternative. VXUS, Vanguard, Total International Stock ETF. Example portfolio, 70-30 split, 70% VTI, US stocks, 30% VXUS, international stocks. Who should use this? Most beginners who want a good balance between simplicity and control. This portfolio is suitable for people who want more US exposure while still benefiting from international diversification. It is flexible and can be adjusted over time as your financial situation or goals change. Advantages: excellent diversification, very low costs, easy to understand and manage, and you have control over your US versus international allocation. How to build it? First, decide your target allocation. For example, 70% US and 30% international. Then invest regularly according to these percentages. For instance, if you invest $1,000 per month, you would put $700 into VTI and $300 into VXUS. Every 6 to 12 months, check your current allocation. If it has drifted significantly from your target, for example, now 78% VTI and 22% VXUS, you can rebalance by selling a small amount of the fund that grew more and buying more of the other fund. Option 3. Three-fund portfolio. This is a classic and well-known portfolio structure that adds bonds for more stability and lower volatility. Recommended funds: VTI, Vanguard. Total U.S. Stock Market ETF, VXUS, Vanguard. Total International Stock ETF, BND, Vanguard. Total Bond Market ETF, example portfolio: 60% VTI, U.S. stocks, 30% VXUS, international stocks, 10% BND, bonds. Who should use this? This portfolio is suitable for people who want some stability in their investments. It is also a good choice for those who are a bit more conservative or closer to needing the money in the future. You can increase the bond allocation as you get older or as your risk tolerance decreases. How to rebalance your portfolio. Rebalancing is the process of bringing your portfolio back to your original target allocation. For example, if your target is 70% VTI and 30% VXUS, but after 1 year VTI has grown much faster and now makes up 78% of your portfolio, you would sell some VTI and use that money to buy more VXUS until you return to your 70-30 target. Most beginners only need to rebalance once or twice per year. Some people choose to rebalance only when their allocation drifts by more than 5 percentage points. Rebalancing helps you maintain your desired level of risk and can also improve long-term returns by encouraging you to sell high and buy low to some extent. Realistic growth example. To help you understand the potential of consistent investing, let's look at a simple example. Suppose you invest $400 per month into a two-fund portfolio, 70% VTI plus 30% VXUS, and earn an average annual return of 8% over a long period. After 10 years, your portfolio could be worth approximately $75,000 to $80,000. After 20 years, it could grow to around $230,000 to $250,000. After 30 years, it could reach approximately $580,000 to $620,000. These numbers assume you invest consistently every month and reinvest all dividends. Actual results will vary depending on market conditions, but they clearly show the power of time and regular investing. How to get started practically. Here is a simple step-by-step plan to begin building your portfolio. Build an emergency fund first. ideally 3 to 6 months of essential expenses. Pay off high-interest debt if you have any. Open a brokerage account. Choose one of the 3 simple portfolios we discussed. Start investing a fixed amount regularly, even if it is small at the beginning. Automate your transfers and dividend reinvestment whenever possible. Review your portfolio once or twice a year and rebalance when necessary. Final thoughts. This is the last video in our index fund series. Throughout these 8 videos, we have covered everything a beginner needs to know to start investing successfully in index funds and ETFs. The most important takeaways are: start investing as early as you can. Invest consistently, even with small amounts. Keep your costs low by choosing good, low-cost funds. Stay diversified. Keep your portfolio simple. Think long-term and remain patient through market ups and downs. You don't need a complicated portfolio with many funds. A simple, low-cost, and well-diversified portfolio that you can stick with for many years will serve you very well over time. Thank you very much for watching this entire series. If these videos have been helpful to you, please give them a like and subscribe to the channel. It really helps us continue creating practical content like this. Leave a comment below and share which portfolio option you are most interested in. What questions do you still have about building your first index fund portfolio? Wishing you all the best on your investing journey. See you in future videos.